Hello, it's Mary Bartos with the Bartos Group of Premier Plus Realty, and we are today giving a housing update for October 2020 based on the September of 2020 data. And my guest today, co-hosting, is Cheryl Stokes with New American Funding. Hello, Cheryl.
Hi, Mary. How are you today?
I am good. I know that we've got people that just want to get us to get into it, so I am going to share my screen here. Which is just amazing to me, all the things that are happening in the world, honestly, quite honestly. All right, so as I mentioned, housing update for October of 2020. As we jump right into it, Cheryl, we always start with what are the analysts saying in this market right now? And there's a couple things that are happening, and it's interesting, Cheryl, I bet you'd agree that as we look in the past, as we project to the future, we're trying to compare because these analysts don't have a crystal ball, right?
Right.
And so, we look at times where you had months of unemployment, and unemployment leads to housing because if people don't have jobs, then they can't buy a house. Does that makes sense, right?
Right.
So when you look at that, you look at months of unemployment with obviously the Great Depression, and any month of unemployment for any person, don't get me wrong, is horrible. But as you look at that with the Great Recession and what happened in the 80s with the oil recession, and now we have 4 months, which is significantly less than any of those other times that we've seen in the past. Cheryl, have any comments on that?
That's correct. And I think the thing to point out is that's months of unemployment greater than or equal to 9%. So as we continue to reduce the unemployment rate, we will have a lesser effect on the ability for people to not be able to buy. I guess what I'm trying to say is it's getting better, not worse.
Without a doubt, it's getting better.
That's a very good sentence there.
Yeah, and again, and let's be real, because anyone that is unemployed, obviously, and right now in the news is about the airlines, and they've been furloughed, and all of that, and people are really starting to chatter about what that means. Well, we don't know what it means, but no one does. So we have to kind of rely on what's happening with, with what the analysts are saying. And again, we take our stats from Keeping Current Matters, who goes out there and looks at all the, other analysts that are out there and what they're predicting. But Cheryl, when I look at this, and I know we've put this on our monthly update in the past, when I look at the dark blue, the aqua, and the light green that says percentage of home ownership, which all of those are above 41%, that is 70% of homeowners own more than 40% of their home in cash. I mean, talk about that a little bit from a perspective of, lending and, what you've seen in the past compared to now.
Well, I think this is key because if you're worried about a recession and you're worried about the future and what might happen in the housing market, the fact that homeowners own more equity than in the past leads you to believe there's less risk out there. It's not like maybe in 2008 or in the past where maybe they only had 5% equity. The current homeowners own a big chunk of their asset now, and that'll make a big difference, and it's a much less riskier time. In addition to that, another little piece of information for you is that right now 69% of homeowners or of mortgages being held by homeowners are under 4.5%, which means there are not very many people out there with the high interest rates, the high risk mortgages that maybe you would have seen in the past. 69% hold mortgages under 4.5% interest, which is huge.
Yeah, that is huge. Considering, I'm kind of blown away by that stat. So let's roughly 70% of people have more than 40% in equity, and that same quote 70% plus or minus 1 have interest rates of lower than 4.5%.
Correct. It completely changes the dynamic of home ownership as a whole.
Absolutely. Now, Cheryl, why are we telling you all this, right? I mean, we're not analysts. We're just trying to tell you that, clearly it's a great time to buy and it's an equally great time to sell. Because what I love about this chart is Ivy Zelman, whose projections are really bullish at future home prices are going to be like close to 6%. And then you have House, it looks like it's going to be minus 1.1. So let's take in the middle. And let's just take, for easy math, say $1 million home. If in a year your house is going to be worth $35,000 more, oh my goodness, wouldn't it make sense to buy a home now?
Right. It's a great investment. And that just goes again to state that families build wealth through home ownership at every level, because a 3.5% to a 5% increase in value is good at every stage, whatever that happens to be that you're in.
Oh, without a doubt. I've got some charts running, Cheryl. I don't know if you've seen them on first-time home buyers, and they build equity wealth through their homes. And those that own home versus those that don't. It's clever. If you're looking at my social media, you should check that out, because not my stats, somebody else's. So, now if I'm a seller sitting here going, well, if that buyer is going to get 35% increase, well, why shouldn't I? Well, that may be, but we have tons of buyers right now because of interest rates are so low. And let's look and see what's happening. This is national numbers, not ours. So you have tons of showings are up by almost 62%. Your purchase applications, Cheryl, this is national. What are you guys seeing at New American Funding?
So I was listening to a report this morning, and they were down 1% this week, but they are up 24% year over year nationally. So that's just slightly higher than this particular stat. And I think this was September, and we're now in October. So we're up 24% year over year.
And I'm going to show you a little bit in our market later what our pending deals are and existing homes are. But you can see nationally, pending contracts are up by roughly 24%. They break it down to new and existing. I don't really break my statistics down that way. And then you look at the existing and the new inventory sales, 39% existing home inventory is down, which is incredibly low. So you've got pendings up and existing down, and showings. That means people want to buy.
People want to buy, and there's not enough out there for them to buy.
Without a doubt. And we're going to share this with you in a minute, but this is a Keeping Current Matter slide that comes from National Association of Realtors that says a neutral market is anywhere between 6 to 7 months. Now, having said that, 6 to 7 months, they are saying today, nationally, we are in a seller's market that's down to a little over 3% of, inventory, months of inventory nationally. Now, okay, so, question for us, Cheryl, is, so what's happening in our area, right? I mean, that's
Exactly.
what we're here to talk about, correct?
Absolutely.
Well, this is a little cool chart that I get from the Naples Area Board of Real Estate, their activity. This was completed, the last one we had was August of 20 compared to August of 2019. 2020 and 2019, they're off a month. I think the new one releases in a couple days. Look at the overall inventory, down 29%. Very similar to what the national number was, which was like 36%. Overall pendings, look at this, up 70%. We are way blowing out the pendings.
Absolutely.
Totally. Right? Closed sales don't matter as much. Median closed price, this is in the entire amount of, the Naples, but we're not going up, for some of my luxury clients out there, it can swing. So one luxury house can swing those median and averages way out. So this is just an interesting thing. You'll see days on market is down by 6%. So, of course, when demand is high and inventory is down, the next trigger is going to be price, right?
Absolutely.
So if you look at our month supply for home sales here in Naples, Florida, you'll see that it is under 6%. Huge.
Yeah, that is huge. That is huge. And that's why we're seeing multiple offers on properties. That's why I'm telling my clients to be prepared. If they're financing, they have to be prepared and ready to go because they're going to have to go in at their best price in order to get that property that they're looking for.
You know, without a doubt, I actually, it's sad to say, but over the weekend, very qualified buyer, very qualified, went into, actually 2 offers came in. There's another one. And we had to struggle, Cheryl, at the last minute on Saturday. This is how hard you work for us. That at the last minute on Saturday, you're putting together their pre-qualification because little did we know that this house was going to need a pre-qualification. Part of it was he shifted from paying cash over to a mortgage. So they wanted to see that. But nonetheless, I should have been preparing him.
Well, and the thing is, I think you're going to see that more because even if they have cash, financial planners are telling their clients to keep their money in the market or however they run their investments because the rates are so low. There's not really a good incentive other than expediency to pay cash over borrowing right now.
Yeah. Money is almost so cheap that people were getting it free from the government. Would you agree?
Yeah, basically. I mean, it's historic how low the rates are. And if you're borrowing and you're anywhere in the threes, low threes to mid threes, there's no reason not to leave your money in the market or in CDs. However you have them invested, whatever your financial advisor says, they're going to tell you to get financing.
Absolutely. Well, to kind of finish this thought out with, new listings versus pendings, and this is January versus September, numbers. If you look at our new listings, very similar to the national numbers, we are, we don't have, we're down on new listings by over 35%, which is very similar to the national number. And look at these pendings, we're way up. Pendings from January to now are up by like 115, 16%. It's just historic. When you think of our market, which is typically, everybody has a summer market for your full-time and, folks that this is their full-time residence. And then in ours, we swing with a seasonal market. This is crazy. Never in a million years would I have predicted this in the year of COVID.
Well, we wouldn't have either. And our market has changed somewhat, at least from my perspective. It's really no longer a seasonal market. You have that bump in season when we have more visitors and vacationers and maybe second home buyers. But our market is more and more becoming year round. People want to live in this part of the country. They want the lifestyle here, especially during COVID. And I think we're going to see this strength 12 months of the year.
Boy, from your lips to God's ears, girlfriend. We call it the trifecta. And when you start to look at that trifecta, those historic low interest rates that you're talking about, Cheryl, that low inventory that we've just talked about in our market. And then a few weeks ago, you might have seen it there, you're following me, that the New York Times, or maybe you saw it yourself, did an article that said 950 people, a day were moving into Florida. From the top, northern states. We're seeing that here. Yep. It's a historic seller's market. Now, our buyers, don't be freaked out that it's a historic seller's market because it's a historic buying market. Cheryl, would you agree to that?
Absolutely. I mean, yes, we're seeing a slight increase in pricing, and it is a seller's market. But because of the rates, because of your increased buying power, I think it's a buyer's market as well. I think we have an interesting blend of a lot of people who are qualified to buy and sellers who are motivated to sell.
I couldn't agree with you more from that perspective, which kind of brings us back to the point of, is it time to move? I don't know if it's time to move, Cheryl, from that perspective, but what I do know is that if you're thinking about moving, Cheryl, I must have been over the weekend that I was helping, 3 different families coming from 3 different areas in the country. And all of them had a deadline to be here before December for tax reasons. And
that's another reason.
And so will we see that? Some people are telling me, let's pause on this. Why should we do this? Why should we put our home on the market now? Because we'll just wait till after in a couple of weeks, we have a historic event called a 4-year election that we do nationally every 4 years. We'll wait till after the election. The election is not affecting what's happening right now. Are you seeing that?
Well, and here's the thing. Yeah, and we put out some information a couple of weeks ago with a chart of every presidential election for the last 50 years.
Yeah.
And in reality, the rates move very little up or down immediately after a presidential election. There are a couple of years where there's a slight change, but overall, there's not a big swing. So if you're expecting there to be some magical bullet sending the rates down, that's not going to happen. And if you're afraid that the rates are going to go skyrocketing after the election, that's probably not going to happen either. Historically, it's just not the case. So really, my thought process is whether you're buying or selling, if you're unsure, what you should do is at least investigate. You should speak to the professionals. You should speak to realtors. You should speak to lenders. See what the options are. See if they fit your particular needs, because we all have different needs. And then make an educated decision based on having researched it rather than hanging back and just not knowing.
I love that you said that, because at the end of the day, where things get is that fear, uncertainty, and doubt, right?
Yeah.
We don't take action when we have any one of those things happening. And that's what historically has happened, at least with us, is people say, I'm going to wait to buy until after the election. It depends on who gets in. It may change. Let's face it, but it's not going to change that much. Like you said, I would love for you to put a copy of that chart in this post that we have on Facebook.
Yep, I will.
We'll do another one, whatever, because honestly, it's going to have to shift. That the Congress is going to have to shift one way or the other to make historic changes. And again, I'm not political. This isn't about me being political. This is truly about talking about what's happening in housing. And I don't have a crystal ball, Cheryl, but I will tell you, and I know you're feeling the same way. We are in uncharted times that I've never seen in my career in real estate. Now, albeit rather short, 10 years, but I've never seen this, where we have amazing interest rates, where we have so much wealth in the homes, where we have, parties that want to move about for different reasons. If you're not thinking of buying or selling, then stay, enjoy it, love it. But if you've had any thoughts, now's the time. Would you agree?
I agree. Now's the time to at least ask. Go research, because you might be surprised at the result that you get.
Yeah, for sure. Well, Cheryl, I know I've been purposely trying to keep these down to a lower amount of minutes because I've been told that it's better that way. So I always thank you, Cheryl, for joining us on this month's Housing Update. Again, I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and my co-host, Cheryl Stokes, New American Funding. And we can't wait to see what's going to happen in the next 30 days. Agreed,
Absolutely.
Cheryl?
Agreed.
Ciao. Have a great day.